moving averages, including the 40-day exponential moving average, the 20-day simple moving average, and the 50% retracement level of the most recent drop from record high to the low of 21,821 lies in this region. On the downside, 22,050 level can be looked at as support 1 now. This is nothing but the 23.6% retracement level. If we do break below that, the most recent swing low of 22,821 should continue holding, but then again I think 21,930 could also add, perhaps give some support, because remember that is a trend line low, and when the market did fall below it and went on to make that most recent low of 22,821, we almost recovered. Remember, that's what happened yesterday. Markets opened sharply lower and recovered and ended in the green. So perhaps 22,050 levels, 21,930 and 22,821 are your levels of support. Moving on to the broader markets, both mid and small cap indices outperformed headliners on Tuesday, rising 1 to 2%. The mid-cap index is now on a 3-day winning run, so perhaps keep an eye out on that, because that is also helping in the recovery, in the sentiment, and it's tipping the the overall market breadth back in the favor of bulls. Look at the advanced decline ratio today. About 3 shares rose on Tuesday straight for every one that fell. Further adding fuel to that bullishness is the fall in volatility. India VIX, the fear gauge, which indicates how the markets are expected to be, at least in terms of volatility over the next 30 days, snapped out of its 13-day gaining streak to end about 2% lower. So I mean, the question I guess on everyone's mind now is, are we at this tipping point, or is the worst over? I think we still need more confirmation of it. Remember, even though India VIX has declined by about 2%, we are still, historically speaking, at elevated levels. 20 is a problem for the market. So, the markets could remain volatile. Remember, we are in the election season, and, as and when the cues that we keep on getting, the markets are going to adjust according to that, because any time, at least before the election season, if you remember, the markets, whenever it would correct, it would be because of global headwinds. That doesn't seem to be the case this time around, because global markets, they are on a recovery phase of their own, and Indian markets, before prior to this 3-day pickup or pullback, were correcting. So we saw some bit of a decoupling as far as global equities and local equities were concerned. The local, look at Wall Street. Wall Street is on one of its best winning runs in 2024. Dow Jones, in fact, had its best week in 2024 last week, whereas Nifty witnessed its second worst week in all of 2024. So clearly there is decoupling happening, where global markets are doing well and our markets are facing some bit of a jitteriness. That could be because of election. Remember, even if you look at historically, remember back in 2019, India VIX, during the voting phase, it expanded by about 50%, and your Nifty, that declined by about 750 points. We are seeing a similar trend this time around, spike in India VIX and a fall in markets, but something very interesting happened right in the run up to the counting day in 2019. Just a couple of days before the election results were supposed to come out, the markets they saw a good pullback, and not only was it a pullback, the markets went on to scale a new lifetime high. Will we see that? Won't we see that? I mean, only time will tell. But then again, the recovery is happening. Again, your supports should hold, but the question really is, how much can you trust this recovery? To answer that and more, joining us on the show now is Mr. Ambrish Balega. Mr. Balega, thank you for giving us time here on News 9. Nifty has again recovered 400 points from the recent low of 21,821. Safe to say that the worst is behind us, or do you think that this recovery is just that, a dead cat bounce?
Well, I think it's a bit too early to say whether the worst is behind us, because the markets have been extremely volatile, and I see the markets to continue to be volatile at least till June 4th, when the results are announced. But then, if you're talking of, today's recovery, which we saw in the morning, at least in the morning, it felt that it was an extremely good recovery. and we could possibly move more towards that 22,500, 600 levels. But then the sort of a correction which has come later in the afternoon clearly shows that possibly this recovery is short-lived, and we could again see a correction. But I won't really stick my neck out and say as to which side the markets would go. I think I'll just wait out and watch for a while. I mean, I've been saying earlier that it was time to be in cash to a certain extent. So right now, I'm just waiting on the sidelines to see as to which way the markets move. Because only once it moves beyond that 22,500, 600 levels will I really take a view. Or in case we break that 21,700, 800 levels decisively, that's the time I think we could see a decent correction. And I mean, like possibly at that point of time, I'll take some action.
All right, and so before you joined the show, we were talking about the spike in India VIX. I mean, India VIX has more than doubled in the last few sessions from about 10 odd levels to over 20 now. I remember back in 2019, we saw something similar during the voting phase. VIX surged by about 50% or so. Nifty dipped by about 750 points. However, as we got closer to the counting day, the market not only bounced back, but after the results came out, Nifty went on to scale a record high. Can we expect something similar this time around? I mean, you are expecting the markets to remain volatile, but I think the big binary event or the investors are waiting for is the result. So could that perhaps tip the favor back in the bull squad?
No, see, I think the best is discounted to a very large extent. I mean, I don't think there's a major question whether NDA will come back or not. I think the question right now is as to how much majority. Is it a slim majority? Is it a decent majority? Or is it an overwhelming majority? When I say overwhelming majority, we are talking of closer to 380 or 400 plus. And a decent majority, we're talking of about 320 to 330. And a slim majority will be closer to those 270 to 80 levels. Where they'll just be able to form the government. So, in case the markets correct before the elections, before the election results, if the markets correct decently, and we end up at about 320, 330, yes, I think we'll see an extremely good bounce back from the lower levels. But if we remain at the current levels, I don't see a major move from here. I mean, in case we get 320, 330, in fact, we could see a mild correction to a decent correction. Now, if we get 400 or 380 or 400 plus, then I suppose you'll see an extremely good rally from whichever level we are. I mean, if we are corrected, then I think we'll see an extremely good rally if we see those levels. Now, the third scenario is where it's just a slim majority. Whatever level we are, I think we should see a very good correction.
All right, Mr. Baliga has laid out three scenarios. If the majority is slim, we could see a deep correction. If we get to 320 to 330, BJP and NDA gets to 320 to 330, the levels where we are justified. If NDA goes beyond 400, perhaps we see a very strong rally from here on. But so hold on that thought. It's time for a short break. We have plenty more to discuss with you on the other side.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface, but not the living people?
Has Allu Arjun arrived or he's just taking off?
If I really want to hit a moonshot, I want the moon.
These are big stories.
It's very unique to Indian cinema.
What would be the relevance of tradition?
I would believe that the first change has to come in the mind.
World premiere on the 18th of May only on News 9 Live at 9 p.m.
That ink is a semi-permanent dye called the indelible ink.
We are the sole manufacturer of this indelible ink.
Don't try to repair something which is working.
And if your facial recognition
You can go vote in any booth anywhere based on where you are, and then it will be recorded that you can't vote anywhere else again.
Can we retire indelible ink and use biometrics? Theoretically, my answer would be yes.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Last Week here on News 9, and retail inflation in India has dipped to an 11-month low in April, helped by deflation in fuel prices. However, food inflation continues to be stubbornly high, particularly the prices of vegetables and pulses. Now, Mr. Baliga, I'll come to you. India is expecting a normal monsoon this time around. That should alleviate some pain as far as food prices are concerned, right?
Exactly. I mean, that's a positive event which is expected because most of the agencies have said that either it will be a normal monsoon or a above average monsoon. So that's good news from a food inflation perspective as well as rural consumption point of view.
All right, we'll shift focus from retail inflation to another positive for the markets, and that's coming in the way of railway stocks. Now, shares of railway PSU stage a strong comeback today with stock rising about 3 to 9%. But, despite today's surge, some of these stocks are still down for the month of May. Mr. Baliga, I'll come to you again. Does it make sense to add these stocks in one's portfolio, especially ahead of the budget? Because, I mean, if the incumbent government does return back to power, the focus will remain on infra, right?
Absolutely. But then the issue is with most of the railway and defense. I mean, this is what I've said earlier also, that most of these companies are sitting on huge orders. And those, that inflow of orders has already been discounted in the stock prices, because of which we have seen this, these stocks multiplying. But from here on, I really don't know whether they'll be able to take any more large orders, because most of them have at least the next 4 or 5 years, next 8 years, revenue already booked. So I don't think there's much of a cushion to take further orders, from here on. So that is not discounted by the markets, and also the execution risk, because it's not possible for these companies to increase their capacity overnight. I mean, they can't double or triple their capacity overnight, because quite a few of them are those large companies, which is very difficult to really, multiply your capacity. So because of which, I feel that these risks are there, which is still not been discounted by the markets. Markets are only looking at the order flows. So somewhere, I think when the market discovers it, you will see a correction. So I don't really advise people to buy fresh into railway or defense stocks at this point of time. One should possibly hold on, but not really buy too much of fresh.
All right, no, maybe not initiate fresh buying in railway stocks. But, sir, considering the markets, they have corrected quite sharply from record high levels. Multiple sectors and stocks, they have also, the prices have fallen quite substantially as well. So, at a time like this, what would you recommend, in the run-up to the budget in July?
No, this is going to be the first year of the third term for the government. So I think it would be time again to possibly take those, a tough stance, because if you, want to see real huge growth in the next 4 or 5 years, or possibly beyond, which is what the government is looking at the next possibly a decade or two, then one has to take certain tough decisions. And possibly, I think, there is no better time to take such tough decisions in the first year of the new government. So I think we should see some of those things coming out in the budget. So don't really expect a populist budget. And this budget, from a market perspective, could be disappointing. Like I said, it could be a tough budget, so it could be a bit disappointing. So, I will not really buy, from a budget perspective. I'll hold on for a while before I really go and buy in a major way.
All right, and shifting focus before we let you go, so the primary markets is buzzing once again, and the initial public offering of Anushka Sharma and Virat Kohli backed Go Digit General Insurance opens for subscription tomorrow, which is May 15th, and will close on May 17th. Now, the Bengaluru-based insurance startup in its DRHP has disclosed that it may not be able to maintain profitability in the future. Now, this is because its loss reserves are based on estimates as a future claim of liabilities, and if they prove to be inadequate, it could lead to further increase in reserves and eat away from their profitability. However, it doesn't seem that this statement from the disclosure from Go Digit is bothering the markets, because Go Digit's shares are commanding a healthy premium of about 50 rupees in the unlisted market, which indicates a potential upside of about 18% from the IPO price. Now, Mr. Balega, what's your recommendation on Go Digit IPO? Subscribe, or will you give it a pass?
No, in fact, there are so many other IPOs which possibly can give you a much better return. And again, I'm not talking of the main board. I think there are enough IPOs in the SME space which can possibly give you an excellent return on listing. So those who are looking at returns on listing, I think they can give a Go Digit a go, because I don't think the listing will be too great. We are talking of about 15 to 18% currently. When we come closer to the listing date, it is very much possible that this premium can disappear, which has happened for a number of IPOs earlier too. So, unless one really believes in the story in the longer run, I think one can, buy in the market than apply for the IPO. This is exactly, or a similar statement was made by Paytm before they came out with an IPO, and we have seen what has happened. Because, when you're listed, we need to see profitability at some point of time.
All right, Go Digit, maybe give it a miss. That's the word coming in from Mr. Balega. But before we let you go, sir, the kind of choppiness we have seen in the markets, what would be your advice to the retail investors out there? What should they do at a time like this, and how should they perhaps tackle a choppy market like this?
No, like I've been saying, I think one should be in cash to a certain extent, because there is a major binary event which will happen on the 4th, which all of us know. Possibly wait till then to take a fresh view, because like I said, most of it is already discounted to a large extent. All the positives are discounted to a large extent. So in case we see a decent cut post the elections, that could possibly be a time to buy, but not really right now. So utilize this volatility to book out to a certain extent. Get into about 20-25% cash.
All right, maybe use this volatility to book some profits off the table. Let the dust settle, let the binary events get out of the way, and perhaps then enter the markets with a fresher perspective. That's the word coming in from Mr. Balega. Sir, always great insights from you. Thank you for giving us time here on News 9. Alright, with that, it's a wrap on this edition of Last Week. We'll see you tomorrow at 9:45 AM on First Take. But coming up next is Business Plus.
America, there is an inheritance tax. In India, you don't have that.
कांग्रेस की लूट जिंदगी के साथ भी और जिंदगी के बाद भी.
Our manifesto combines